Are you tired of watching stocks reclaim their 50-day moving average only to be left wondering when to buy? I'm Rick Pedicelli, head stock analyst at Morpheus Trading Group, and I've been mastering the art of swing trading for over 20 years. Let's dive in and discover how to buy the first pullback to the 8-day EMA after a stock reclaims its 50-day MA. So how do we buy a stock that's reclaimed the 50-day MA, that's building the right side, potentially building the right side of its base after a correction? We're looking for a few things. One, we're looking for a stock that's breaking a downtrend line, and this is Celestica. So we're looking for a potential downtrend line break, followed by a reclaim of the 50, and that could happen on the same day or within a few days. We're looking for higher lows in place, higher lows, and here's the 50 MA, and this is the 8-day MA. And we're looking for the 8 EMA to cross above the 50, and then we're looking for the first pullback to the 8 while it's above the 50 as a low risk buy point. Again, we're trying to find stocks that are building the right side of the base. And how do we know it's the right side? Well, if the stock is making higher lows, it's above the 50 MA, and the 8's above the 50, it's trending higher. It's trying to emerge from a basing pattern, or that's how we look at it. Also, CLS is a pretty strong stock, so you don't see the 200-day MA, but we want all this to take place above a rising 200-day MA. So if we have a break of the downtrend line in the 50 and a reclaim of the 50, but it's below the 200 MA, we're probably not going to pay attention to that setup. So getting back to CLS, we have the downtrend line break, we have higher lows, we have a reclaim of the 50, we have a surge up, and then we have a pullback into the 8-day MA. And the touch of the 8-day MA is fine, especially if it comes after any decent pullback over 1 or 2 days with the price pulling back to the moving average. We try to avoid situations where the first touch of the 8-day MA is after a more extended runoff off the low, and the price action doesn't want to correct by price, so it's more by time. It's just straight sideways, and then the moving average catches up to the price action. In that sort of scenario, we found that it's not ideal. We prefer there to be a pullback to the average to act as a shakeout of the week longs. So however you want to buy off the 8 is up to you. If you want to buy the first touch with a, depending on the stock's volatility, if it trades maybe in the 3% range each day, maybe going with a 4% stop or 5 below the moving average, that could work. Or maybe using the 20-day EMA, it's not up here, or the 50 MA as a guide, a break of those averages to sell. Or maybe you wait for the price to turn back up through the 8 and push higher. That depends on your own comfort level, but I prefer to buy closer to the 8-day EMA. So let's run through a few setups. In this example, we have a downtrend line break in Tesla. We have a surge back through the 50 MA. We have the 8 above the 50. We potentially have higher lows in place, but we have the 200-day MA above the 50. So this is a no-go. Not even looking at this one. NVIDIA. We bought NVIDIA in our model portfolio. That's part of the nightly newsletter, the Wagner Daily. And it was basically what we're describing in this video. The first pullback to the 8-day EMA after the price reclaims the 50 MA. So we saw a downtrend line break. There was a surge through the 50. We had the 8 through the 50. We have higher lows in place. The 200-day MA is below the 50. And the first pullback was on May 9th. We didn't buy the touch of the 8. We bought a little bit higher around 892 in the report. As you see, the price just chopped around and held above and pushed higher, and then held the 8-day MA for the second time, and then gapped up after earnings. Here's a few more examples of NVIDIA. And so each not really producing a winning trade with the first pullback to the 8. And this setup is just like any other that we use in that, it has its time and place. It can work. Sometimes it'll work better than others. In a good market, we feel it's a reliable buy point, especially when we're operating under a buy signal. So in the late summer of 2023, NVIDIA broke its downtrend line, set higher lows, reclaimed the 50 MA, but the price action really didn't extend much. It kind of just wedged its way up, and there wasn't much separation from the 8-day EMA. So this pullback to the 8 failed. There was another downtrend line break a few weeks later, which also coincided with a buy signal in the NASDAQ, which occurred in early November of 2023. But as you can see, there was no touch of the 8-day EMA until the 21st up here, which was a 28% move before there was a pullback. And I mentioned a bit earlier, we prefer to see the price action pull back to the average rather than the average catch up to the price action while it goes sideways. And that's exactly what happened here. And in NVIDIA on November 21st, 22nd, the pullback to the 8-EMA was too high in the base. It actually comes after a false breakout above the highs. So that isn't an ideal entry for a pullback to the 8, not what we're looking for. However, we have another pretty good example in AFRM from 2023. The 50 MA is above the 200. There's a downtrend line break, separation from the 8-day, pullback into the 8 and 50 MA here, higher lows, another pullback to the 8, gap up, and then another pullback to the 8. I believe it was around the 24 area that we mentioned AFRM as a buy point in our live trading room, and that led to a pretty strong move there. So as you can see, this can be an effective technique to catch stock that's reclaimed the 50 MA and it's ready to go right now. All stocks aren't going to pull back to the 8-day EMA after they recapture the 50, but many will. So we think this is a pretty good low-risk buy point to take advantage of short-term weakness in a new uptrend. And the last example we have here is MSTR, a downtrend line break, higher low, reclaim of the 50 MA, surge up, pull back into the 8-EMA. That's the low-risk buy point. We have the higher lows in place. Price is still well below the prior high. So this pullback's a pretty low-risk spot to try to get on board what is a pretty volatile stock too in MSTR. So not always easy to capture that one. All right, traders, let's recap the key points we covered in this video. We learned how to identify the perfect entry point after a stock has broken its downtrend line, the downtrend line break here in the video. After the downtrend line break, we have higher lows in place. Price reclaims the 50-day MA as it did here. And then we have a pullback into the 8-day exponential moving average. By waiting for this specific setup, you can increase your chances of getting in at the right time and maximizing your profits. But remember, no single strategy works 100% of the time. That's why it's crucial to continue educating yourself and expanding your trading tool.